I'll stop it there. I don't know if you know how that's actually part of the battle song. That I'll end with that. If you want to know how that ends, that's probably the best part of the soundtrack of the whole movie. It goes actually for like 5 minutes though, so I can't get into that. Another Hans Zimmer classic. If you don't know who Hans Zimmer is, search him on Google. He does a lot of movies, from Star Wars to a lot of soundtracks. Inception, Last Samurai, like everything with the sort of epic background music. He's very involved with a lot of those movies. Now, how did we go last night? Now, Yellen came out, definitely taken as hawkish from the market. Dollar yen reacted the most, back above 114. Actually, it was a good timing for the dollar yen. The dollar yen rally was stalling, right? We were talking about this yesterday. Definitely didn't want to see this pullback here. That was getting dangerous, and if we folded underneath it, then the trend line sort of still continuing. Now, the downward trend line actually came in around about 114.30. We're above that now, and probably we're going to be testing 115. Now, this could be etching out. Forget about the downtrend and all that. We're talking about trying to etch out a range, and the range I think which is going to be established is going to be the 115, 112, 105, 107, or 105, 108 range. I don't think that the US dollar will have enough momentum to get past these levels very easily. So we're at the end of this sort of range building process, in my opinion, and that's why I'm going to be very hesitant to see what happens up here, right? Taking profit on any sort of US dollar strength, and looking for the market to find resistance and reverse. I think it's evenly split between the forces pushing the US dollar up and some of the concerns about Trump's agenda, pulling it back down, and also just Trump's ability to talk down the US dollar when it starts to rally. Is something, including the new Treasury Secretary. These things are what we're going to be watching to see the reactions to new US dollar strength if it can pull back down. So definitely be hesitant around the 115 level and the 105 level. Not a time to be a hero or to see what happens. I think it's I think the risks are too skewed towards profit taking. So I myself will be very flat there. I'm not going to be selling the US dollar, but I'm just going to be taking profit. No. That movie was a gladiator, kimchi. Yeah, we can have a little look at oil. I mean, oil's under pressure from some of that data that came out earlier. And then we got the real government data later. Okay, shit. Dollar CAD, Euro CAD, yeah. You can have a look at that. I mean, Euro CAD and Euro Aussie are very similar in terms of their movements as well. So it's important to we're checking on Euro Aussie, and you can jump across from the Euro Aussie to the Euro Dollar CAD, Euro CAD a little bit easily. This week's trading decision making. Homer Newman, how do you integrate the current yearly and quarter results released in this week's trading decisions? Okay, I think you're talking about stocks, mate. No, you don't have to. I mean, you don't have to go that micro. Just stick to the macro. So, in terms of what's pushing the Dow up, it's mainly only 3 or 4 stocks doing a lot of the heavy lifting. A lot of the banks are pushing up the Dow. And so, yeah, those are more important than most. But you don't have to go into these sectors when you're trading. And, the Dow and the DAX is a secondary thought on why we're, making our decisions. It's whether it's risk on, risk off, or if there's enough movement to sort of push a market past resistance. So, Dow going up 300 would be enough for the dollar yen to be lifted past the 115, 115.30 sort of resistance zone, and that would be the reason for it. But yeah, don't be looking into stock markets reports. I think that's what you're talking about. It's pretty unclear. you're talking about economic data, then of course it's important. In 8 minutes we've got the earnings inflation out of UK. So the average earnings is very important by the Bank of England. In fact, for a long time, it was using that as the main reason for holding or not holding. It sort of like was looking for reasons to be dovish, and it was using the lack of employment, wage growth to sort of justify the lack of movement. Now, if we start to see a tick higher in that data, forecast at 2.8, it should support the pound. But the pound's fighting against the US dollar, so the way we're playing it and the way that we were playing it yesterday, and it's working out quite nicely so far, is we sold the euro pound back at some of those levels, 85, 85.20. This trade was actually entered in after the market rolled over. And no, if you're watching last night's stream, you would have saw we talked about this extensively. You know what's going on in the euro pound. Euro selling just generally like it is right now definitely helps euro pound go lower. Pound's got a lot more support, and so we should see it squeeze lower. 84, 83.50 is the support. Below that, you know, there's a huge amount of daylight. So if we can get below that, then you know we can start talking seriously about 80 quite quickly. Quite quickly indeed. So an important part of that is what happens today in the data. Another piece of weak data might be enough to end the pound sort of outperformance, and you can see more aggressive profit taking. And so we'll close out this. We'll close out the lower one. I won't be able to close that at all. I will close out the lower one, and in theory I would close out the lower one, and I'll be moving the stop to entry. But on this particular case, I have been mucking around on this account, so it won't. Yeah. Well, that'll be interesting if it comes that strong. So, yeah, the chances are skewed much more towards the downside here. You know, these numbers come in pretty predictably. Now, the number which is also coming out with it is the claimant count number change, and that is forecast to be positive, which is actually negative, right? Positive numbers on this particular one is negative. It doesn't really have too much variance though, and therefore is not watched that much. There is a headline employment number as well. That also doesn't have much variance, so I wouldn't be looking at that too much either. The main thing to be watching today is the wage growth number, which is called the average earnings. Is it a bad time to buy the euro? I mean, it's the best time in the last couple of weeks, but you don't have any reason to apart from the value of the price, right? It's there's no reason why you wouldn't just wait here to see what happens with dollar yen and US dollar strength in general. See if you can get a move towards that 105. At least wait for some buying to happen, right? You don't really want to be the first one buying. Yeah, US yields, FX RAM are very important. Yeah, so we did see that spike higher. Did fail at 2.5 again. You're right, the 10-year. Let's see how they're faring in Europe. I haven't looked for a couple hours. So this is what you need to be watching every now and again, guys. At the moment, seeing if there's any movement here. If you see dollar moving aggressively one way or the other, just check what's going on with the 10-year. Why is that 2.5 level so important? It was the level that sort of catches the market's attention, and it's failed multiple times above it or at it. So it is seen as a line in the sand a little bit for this US dollar and dollar yen in particular. you can imagine if we do break to 2.55 or 2.6, then dollar yen's going to be breaking the 115.30, and we'll be talking more to the top side on dollar yen again. But it's a big if, right? She wasn't that hawkish. She just refused to rule it out. The chances increased like from 25 to 30%. Nothing major, but still enough to get the market excited. In a market which the US dollar was coming from lows, and there was a bit of momentum behind the US dollar, she did nothing to stop that. So that's the main reason. 3 minutes for this pound data. Madame, when does automated trading start on your Gold Star, ma'am? I mean, you just got to make sure it's connected up, and then it should start to come through pretty quickly when he does trades. If you have any issues, then you'll know. But yeah, obviously he has to do a trade. Slackbladder saying that he hasn't done a trade at the moment, so yeah, you won't get one until he does. Homo, were you talking about economic data, mate? Hard to follow what you're talking about. Alright, so 2 minutes. We'll do some pound moves. I don't mind selling more here if it comes in decent. Now, we sold into it yesterday, but today you don't sell into it again, right? You didn't make a fresh low, so you can't sell into a rally here. So weak data, right? And leading to a pound sell-off. You can't sell the euro pound again. So keep that in the back of your mind. Second day is definitely not safe. First day was, second day is not. Mainly because the pullback here did not make new lows. If it had, then yeah, we could talk more about buying into it. Ten seconds. A little bit weak. Claimant count was very weak. More interested in average earnings though. Average earnings is also weak. Yeah, time to close. Time to close. Wait and see what the price action brings. Probably going to be breaking higher. You'd think so. Yeah. Surprisingly, the market's not reacting more to those numbers. Oh, sorry, the climate numbers are really strong. It's the earnings which are really weak. Now that you can see that a super strong number there in the claimant actually did not overwhelm the earnings. Earnings are much more important. So it does seem that's mixed data. I hate when countries change up the way they put out their employment data. But yeah, so really weak is really strong for the UK. But the wage growth is not going to help. The whole inflation argument that we saw dampened yesterday has been dampened further by that, and that's a bigger miss than yesterday's miss. That doesn't bring support. So if you're short euro pound, you probably just take profit, close it out. Yeah, Homer, we've talked a lot about the data, mate. If you want to learn about how economic data affects the market, then stick around. We'll be looking into a few of these later. CPI is the most important from the US. So pretty weak number in terms of what I'm looking at there in inflation, but pretty soft reaction. So mixed a little. I mean, the good thing about this is you're not playing it against the US dollar, right? You're playing against the euro, which is also weak. So it's sometimes it does require patience. If it gets back above 85, I'd probably close. But if you're worried, just close now. There's definitely a few permit bears out there in orbit. I think we're going to 110. That is definitely possible. Alright, let's have a little bit more of a closer look at what Yellen said last night and how the market's reacting more broadly. She's going to repeat pretty much what she said tonight. Very unlikely that she doesn't. Oh, better get out of that euro pound I got in the competition account. A few weeks ago we did look into Dutch elections. Probably not today, given there's a little bit more on to be focused on than this, but we might talk about the Dutch elections tomorrow. We looked at them last time. Basically the leader in the polls is the right nationalist sort of player, so there is some concern there, but the way that Holland politics works means that you won't see him have full power. You have to form a coalition, and that will, severely dent his power. Usually it's a multi-party system, 5 to 10 parties in power. So there's a bit of focus on the upcoming meetings. That's why the March, which is really unlikely they're going to raise in March given the uncertainty about Trump's stimulus plans. That's the main reason, just logically, to be holding off. But the door is definitely open. So what would be really important here is if a really strong inflation number tonight or a really strong NFP in early March would also allow the door to open further. But also keep an eye out on further Fed speak from different Fed members. If they do plan on sort of raising rates, they're probably going to start to talk it up a bit more to prepare the market. And if anything, the stock market's definitely not going to stop them having fresh all-time highs, 20,500. If anything, that will embolden you as a policymaker to sort of put some heat out of it. So this chart here shows you the slight move up, but June is starting to firm again. So if it gets above 90%, it's pretty much locked in, and that the market, they'll probably just wait until June, so it won't freak out the market at all. Once it's fully priced in, it's very easy for them to get away with it without any sort of impact. So if, definitely as a betting man, I'm looking for June. That means at some point the March rate hike will be taken out of the pricing. That will be leading to 100, 150 points worth of dollar yen weakness when that sort of happens. But makes next month's NFP a lot more important than the last one. You get reaction from the number, but you get reaction immediately on the chances of the Fed raising or not raising. Yeah, I don't think you should be buying this euro, guys. That seems pretty dangerous here. Let the dollar yen taper out first. Let the dollar yen lead the way. Then you can sort of use it as your guide. If the dollar yen starts to fall, then you can start to buy the euro. But yeah, not yet. The surprising more resilient currency last night today was the Aussie dollar. Now, really, it's struggling at all to get any negative pressure developed. We've had every reason in the last 2 weeks to break back below 76.10. We haven't been able to. A more sustainable rally FX RAM, but I'm just talking about the chances of the Fed raising rates. Like a killer number, like a 250, 300k number would really allow them to get away with it. But yeah, obviously they want inflation. They want to see inflation. But what we're getting here is 2-year highs in copper, continued strength in iron ore. We're talking like 30-40% above what the market expected the price of copper and iron ore to be at. This is really supporting the Aussie dollar here. And so the top side, 77, I was saying, was vulnerable last night. It's definitely even more vulnerable today. Every reason to sell off with the strong US dollar comments, and it's just bounced straight back. It can't survive forever. So 77 is most likely gone. And it would be... it'd be pretty dangerous to be selling Aussie up here. This is... You're a brave man to sell again into this. You got your chance to get out of your shorts yesterday. So how's this play out for the Euro Aussie? Well, Euro Aussie was already at that 138 level before the sort of outperformance. Now it's by some accounts breaking this level. I don't think you can stand in the way here. Yeah, I don't think that the Euro has enough room to rebound without a stock market pullback. Now, if you get a stock market pullback, then you can definitely talk about Euro Aussie reversing. If you get a China story, you can talk about Euro Aussie reversing. But the way Trump's moderating his currency manipulation talk against China, and the way that Prime Minister Abe came out from Japan, said that Trump understands they're not manipulating their currency, means you're not going to get that comment. You're not going to get that big headline that can get us selling the Aussie, I believe. So you really have to respect the Aussie strength, and that means not fighting it, especially against the weakest pair out there, the Euro. And this goes for all the commodity currencies, mostly for the Euro Aussie, but definitely also for the Euro CAD. You don't want to be pressing it, even with a bit of oil weakness. The CAD hasn't really responded at all, and you can imagine that the 130 level gives, and then the Euro CAD will smash low. Now, it's visibly below its support, so you're really tempting fate here by buying. No reason to get involved in such a dangerous trade on a counter trend until you start to see some form of risk aversion come through in the market. So where could risk aversion come from? It comes from the stocks, comes from a story that's got legs, and there's nothing out there at the moment that's got legs. So in terms of stock market weakness, if you look at, sort of what we've had in the last week, you've had 6 days of rally in the Dow, and I was reading inside the FXW chat room there, analyzing the last time the Dow's gone up 6 days in a row. Something like 15 out of 20 resulted in a day off, so a selling on that next day, on the 7th day. So even if we do get a little bit of selling today, though, I mean, that's not going to be enough. It's not going to be enough to set the, to reverse the Aussie dollar at all. If anything, a bit of US dollar strength here, US dollar weakness, would allow the Aussie to break 77, and that's a clear little resistance zone. So you're just going to be tempting fate if you go against the market here. There's no reason to. There's definitely no reason to. And dollar CAD as well, I mean, you really have to think oil's going lower, significantly lower. And that's just hard when you get those headlines that Saudis had huge cuts, right? It's evenly priced in almost what's going on in the oil market. So I don't think you can get the volatility. The volatility is dampening down a lot in oil, so you can't get that. You can't it's not one day that will change a trend. So the dollar CAD down selling pressure, it can't be changed with one day of oil weakness. You need to see substantial oil weakness to reverse it. And so without that, then the 130 becomes vulnerable, a 130 break, and then who knows how far we can go down. Same with the Aussie, it can go to 80 cents here if it breaks 77. So you are trying to pick bottom if you're buying the Euro CAD and buying the Euro Aussie. Now the reverse side of that, if you're already short, then just hold it and wait for a situation where the market starts to reverse before taking profit. In terms of trading at these levels, there's no need to trade either way at these levels. So even selling here is sort of crazy just on the valuation alone. But that if you put a gun to my head, then I'd be selling. Alright, not buying. Yeah, so and these are medium-term views as well. It's going to be hard for that to change. The whole picture is getting better for Aussie and commodity currencies, and the whole picture for Euro is just unclear. If you're asking the question, Dr. Pepper, if you're asking the question, almost always the answer is take your loss. Almost always the answer. Okay, it's obviously on the back of your mind. It's obviously you're concerned about it. Obviously you don't have any sort of confidence in the trade. Okay, so what's the best case scenario here? That the market rallies a little bit and you get your money back? Because you're not going to be holding the profit trade for a profit. So, yeah, I mean, close as soon as possible because you're really mentally in a bad state. That's you've got no control when you're counter trend trading. When you're trading with a trend, even if your entry point's wrong, over time the market should go back to your direction, so it should be okay. Now, while I believe the euro is going to etch out a range, and so is the dollar yen going to etch out a range, it's hard to say whether it's going to be at the 105 level. It might be lower at the lows of the year, 103.50. So let's let the market tell you when to buy the euro. Let the market develop a reason, right? Something change, but right now you haven't got that. So as long as it's not a huge loss, then just take it. If the market reverses, don't get angry. If it rallies from here, it's part of trading. But yeah, nearly every time a trader asks me if they should take a loss, it's yes. Alright. Mainly because you're concerned about it. Oh, yesterday we looked at the Danske Bank. Today we're going to look at some Credit Suisse technicals. What happens here is pretty important. No one's going to call you crazy for closing out though, guys, if you close. Nothing new there in the dollar, in the euro. Dollar yen, they're targeting, they're still keeping the eye on the 114.30. And above that level 115.30 is a bit more key. Oh, they're short. Okay. Wow. Good luck to technical traders on that one. These guys looking to sell again at 127 on the pound. I mean, that's a pretty ambitious sort of trade call, right? I'm going to wait for the market to rally a couple hundred pips and then sell. Looking for the break higher in the Aussie. This is pre-Yellen actually. This is not good to be reading. Let's see if I can find something a little more new. Let's have a look at some of the US CPI preview. Finish up on that. I mean, that's more important than anything else today. Yellen's not going to say anything new. It's going to be more about the CPI number. These guys expecting slightly harder than consensus. 0.4. 2.3% year on year. Now, these numbers are much more normal than the deflation concerns at 1%, 1.5% that we're getting a lot of in the previous years. You can imagine if the market, if it comes in hotter than this, even though this is already hot, you will probably see the market respond a lot. Even at 0.4%, you're probably going to see 115 on the dollar yen. Core CPI 0.2, 2.1%. So eventually, finally what's happening here is that the, definitely in the major one anyway, the price rebound in oil is definitely coming through year-on-year numbers wise. And you should expect that to continue. So the cleanest way if you're trading this in a couple hours time is to be watching the dollar yen. But at these levels, you have to be wary what happens at 115, so I won't be trading it myself. But we will review tomorrow, same time, 9:30, and probably 9 GMT, and probably what we'll go into tomorrow is a bit more in-depth look at what's going on in the European elections. Before the French election is the Netherlands election, and so we'll go over again, for those who missed the last time we looked into it, we'll go over again what's going on in Holland. Where there is the current leading polls is the far right. Alright guys, if there's no more questions, Homer, where do I find these articles? It's FXWW. Search that. I'll put a link in the chat. It's where it's just basically you get a lot of banking reports. It's around 50 US a month. a lot of bank and hedge fund traders in there. You can't type it in there, but you can read what they type. So that's what you're getting access to. And there's no inside information if that's what you're hoping for. Alright, good luck with your trades, guys. We'll be back tomorrow 9 GMT.